5, 4, 3, 2, 1. Okay, everyone, welcome to That Real Estate Podcast with Henry Matthews. This is episode 5, and my guest this week is James Meers, the founder and CEO of Park Street and Company. Before I get into it with James, I once again want to thank everyone who's taken the time to watch the videos that I've posted on the channel so far. It's been a great help, and we're doing really, really well. If you enjoy this video, please go ahead and subscribe. That's going to make sure that you can see this video and all of our upcoming videos as well, and you won't miss anything. That being said, James, welcome to the show.
Hi, thanks for having me. It's a pleasure to be here.
Yeah, it was great. We've been talking just before we got started here, and James seems like he has a wealth of knowledge as far as real estate investing goes. James, my first question to you is, can you explain to people what you guys do at Park Street and Company?
Sure, yeah, happy to do that. So we are a real estate investment company. We're based in Ontario, Toronto, Hamilton region. We focus on multifamily residential real estate properties, acquiring them with joint venture partnerships. And our big focus really is, I would say triplexes, 4 units, maybe up to 6 units is kind of where we like to play our little sandbox. And we've been around for a few years, and it's been an exciting beginning, let's say, for 2020, now that I've gone full time.
That sounds awesome. What are the benefits to investors that work with you through the company? What are the benefits, like the returns for somebody that might want to invest in your business and your company?
Yeah, that's always the $1 million question everybody asks, right? What are my returns looking like? And I think that's really important.
Get right down to the root of it, right?
The root of it. That's right. Yeah. So if you look at real estate versus other asset classes, as you referenced, I think it really comes down to, what is your ROI? What is the return on investment? Particularly if you're going into it as a passive investor. And those are the investors that we work with, are passive capital partners who essentially say, I've got some capital, some capital that's sitting in, savings account A, and I'd like to see somebody grow that capital. So, they'll give it to, financial advisor or mutual fund broker or whoever that might be. In the case of our company and, really this industry of real estate investing, we focus on growing that money, accelerating the wealth generation over time by investing in real estate, by forcing the appreciation of real estate. And the end goal is really to maximize the return on investment for our investors. If we talk about numbers, it's always hard to say because every project differs, and there's different amounts of capital required, say for down payments, different amounts for capital improvements. But I mean, you're looking at anywhere between 25% to, in some cases I've seen, 100%, 150% ROI annualized year over year. And if you compare that to some of the other asset classes, mutual funds, which you mentioned, there's a fairly significant discrepancy there. So I think that's kind of one, I would say, perk or competitive advantage that investing in real estate has over some of the other asset classes that attracts investors. The other piece, again, going on the assumption that it's a passive investor, not an active investor. The other piece there is that, specifically with the strategy that we utilize, which is called BRRRR. So buy, renovate, refinance, rent, and repeat. So the idea there is, what we're doing is we're buying real estate, we're investing capital to lift and force the appreciation of that asset. So let's call it a triplex. So we'll do some cosmetic upgrades, we'll redo the floors, lighting fixtures, bathrooms, kitchens, whatever needs to get done. Rent it at market rents. So we're lifting the rents, so the monthly cash flow. But our next focus, our next step in that process is to then have it appraised at a higher value, because we've brought up the market rents, and we've also obviously increased the value of the property by our renovations, and extract. The goal is really 100% of that initial capital that went in through our investor. And that includes down payment and capital costs and closing costs. So as an example, say you have a $500,000 property, we purchase that, you put 20% down, and let's say the renos are $50,000. So I can't do the math in my head. I was never good at math, so I'm not going to even attempt to calculate those numbers. But let's assume that it's, $150,000, $200,000 range. The idea would then be to do those renovations, have it reappraised, and have the bank then refinance hopefully as much of that capital out, so that an investor is sitting back with all of his initial capital, and he's got ownership of the property, in which is a percentage, whether it's 50% or whatever the partnership deal is, of the equity and the cash flow. And now he has infinite return on investment. If we do not extract that capital, you're looking probably at 25 upwards of 50% return on investment on the typical properties that we look at.
How are you guys managing the renovations? I know in that example you gave, you talked about $50,000. Renovations sometimes can be a little bit more than what we think they are. How does that work in the partnership that you have with your investors?
Yeah, so renovations I've got a number of renovations right now as we speak, one in New Brunswick, one in Hamilton, one in Toronto, or a few in Hamilton. And I can tell you that, they're not easy. And I think that's where the partnership, having an active investor, an experienced investor managing that piece is critically important, because that's where you're really going to see your return on investment. And having the right trades people, having the right team that is trusted from the various trades, electricians, plumbers, drywallers, people who do flooring and tiling, painting. These are different trades, and often your typical individual may go to a general contractor, but there's always a premium there. So you're paying a general contractor to manage all the trades to get the job done. In the case for our projects, we really work with the relationships that we already have, and obviously look for fair, reasonable trades people that could do the job and execute on the timelines that we have. So there's a lot of variables that go into having a successful renovation project executed. One of them obviously comes down to knowing the right tradespeople that can deliver on your timelines, and doing them within budget. And there's a lot of management that goes into that. It really is a project management kind of situation, where you're keeping people on track, you're making people deliver, you got to keep an eye on how the renovations are panning out, you're making decisions on the aesthetics. And that is a big part, very valuable skill set to have for any real estate investor or anyone thinking about real estate investing. It certainly is not rocket science. And going into it with the mindset that you are not the expert in any of those trades. You are the manager to ensure that the project is executed successfully. So that's really kind of the differentiating factor, I think, between say an active investor and somebody who perhaps is, say, a flipper. And you see this a lot on TV, where you have the trades literally going into a distressed property and looking at it and doing the work themselves, and then selling that property. And there's money to be made there, but that's also a different type of work and skill set. So yeah, I think to your question, is it important? It's critically important. And those are relationships that come with time. You make a lot of mistakes, and real estate is very forgiving over time. And I've made many mistakes on many renovation projects. Even to this day, there's projects that didn't go exactly according to plan. But it's all a planning process. You have to ensure you've got contingencies, extra funds available for things that come up that are unexpected, and timelines that get extended. It's all part of the process. But at the end of the day, you want to make sure you do things on time and on budget. That's the end goal. and you end up with a good quality product that can then be rented to help force the appreciation on the property.
Great stuff there. You mentioned the BRRRR strategy, and you explained sort of what the acronym means there. Can you go into detail? Because I feel like the part of that that mystifies most people is how you're getting the refinancing. I don't think anyone's, confused about the part where you make the house better and it's worth more money. It's how are you getting that refinancing done? Can you give people a little bit more information about what that process looks like?
Yeah. And that's a really good question. BRRRR has been around. I don't know if some of your listeners listen to Bigger Pockets. When I started some of my education, I would listen to Bigger Pockets quite a bit, and then I realized it's a US based podcast that doesn't have as much applicability in Canada, just because of the different rules, regulations that we have up here. But it is popular with a good number of investors, and as mentioned before, buy, renovate, refinance, rent, repeat. BRRRR. That's kind of the acronym there. That's what it means. And the whole notion behind that is you want to, it's about the velocity of money. So if I have $100,000 sitting, I invest $100,000 in a property. Now I own the property. And let's say that's 20% down, and money that's gone to my capital improvements. That money is stuck, and that's okay if you're comfortable with that, and your mortgage payments will be less. But with BRRRR investing, we want to see that money then be extracted, so then we can buy a second property. I'd rather have two properties than one property. And by doing this process, it enables us the keys to do that. And it's tax-free money, because what's happening is you're forcing the appreciation of the value of that property by doing very strategic investments. You're not gutting the house. You're not, changing the roof and changing the furnace. Those may need to be done, but those may not necessarily increase the value of the property. So you're looking for, in this process, properties that are distressed, but distressed in a way that are not going to be major capital improvement costs that do not result in a major forced appreciation. So you want cosmetic lipstick renovation type improvements. And some examples would be change the flooring, change, obviously repaint, change some of the fixtures, change the faucets, maybe redo the kitchen, the bathroom, very strategic areas. Things like that will attract a better tenant profile, a higher market rent. But more importantly, you want to know what the market comparables are for that particular house when it's at that renovated state, so that you can then go back to your lender, whichever bank you're with, and say, hey, we've just invested money to improve this property. Can you now refinance it? And well, first of all, they're going to appraise it. So what is the appraisal on it? And you want to hit a certain number to ensure your loan to value, 20 to 80% is what the banks generally look at. Enables you to pull your initial capital out. The whole end goal is extract that initial capital so you can redeploy it in a new project. In our case, we're going to be returning that to our investors who brought the capital to the table in the first place. And that's going to make them very happy, because now they can take their money and invest in something else. They'll probably invest in another project with us, but they may, invest in stocks or do something else with their money. Meanwhile, we'll be managing the asset. So, that's kind of the strategy, the philosophy. There's many real estate strategies out there. It's one that has worked well for me. And so I'm just continuing to move down that road, but it's not something that, anyone can just jump into. There's a lot of critical steps along the way. You want to find the right property at the right price in the right neighborhood. Make sure that your comps, your comparables are going to meet, the threshold in order to pull that money out. So you want to be looking at the local market, the local neighborhood, comparable houses that are in the state that you want to bring them to. And if you follow that methodology, and there's it's team, it's a people business. So you got to have the right team, the right, as you mentioned, the renovations need to be executed on time and on budget. So if you can follow all those steps successfully, there's a good chance you can extract some, hopefully all of your capital, and then just repeat. It's rinse and repeat. And then, like in my own experience, I can say that I have done this time and again, and people say, hey, look, how are you continuing to buy more and more properties? And the simple answer is I'm just executing a simple strategy, but I'm doing it. The formula doesn't change. I just continue to execute on that strategy. And so one baby produces another baby, which produces another one. And it's almost, it just continues to move in that direction.
I'm really excited to ask you about what your portfolio looks like. But before we do that, you touched on tenant profile. Can you explain sort of why it's important to find a good tenant? Have you had any horror stories with tenants? And in your opinion, how quickly can a bad relationship with a tenant kind of really derail that process?
Yeah. This is a great question. And this is when I talk to friends that are looking to invest or new investors and they kind of ask for some tips. I think the first one we go through is tenancy. Finding the right tenant can make or break your cash flow. It can make or break your stress levels of being a landlord. I know there's a lot of burnt out landlords because they've had such bad luck with tenants. It is, again, a people business. And tenants are essentially your customers in a way, if you think of it like that. They pay rent, they pay down the mortgages of your properties, they pay down your expenses, and they give you some cash flow. So, having the right people in your units that are not destroying them, that are not paying you because suddenly you have no cash flow, that's a problem. That is critically important. And the due diligence process is super important. It is, if you think about what are high ROI activities as an investor, as a property owner, finding the right tenants is probably number one or number two on that list. The reason why, and I can speak to experiences right now, as literally in the last couple months. And so we all fall into these kind of traps where there can be deception out there, and people fall through your due diligence process. I've got one which I thought was stringent. I think it's stringent, but there's still cracks. You can't always know what's hiding under the rocks, and you could have a tenant that comes in and suddenly their boyfriend shows up or their girlfriend shows up, and that is not a very good tenant to have, and you did not approve of that tenant. And suddenly you've got issues. You've got issues in the property, whether it be noise, whether it be damage, whether it be other things, and you've got to manage those issues. My one tenant I had that was recently evicted a couple months ago. It was an emergency eviction, actually, that was done. One of, I think, 13 or 14 in the province of Ontario. This is during COVID, so this is how serious the problem was. But he's, as far as I know, is part of some criminal crime gangs, and there's a lot of criminal activity going on, dealing of drugs and the use of drugs, and violence, and all the things, the horror stories that you could imagine, sanitation problems, parties, like everything. It's kind of like everybody's worst nightmare is just coming to fruition. And is right in the middle of COVID, and I had to install security cameras to kind of document the issues with evidence, because there is a process. You've got to go through the Ontario Landlord Tenant Board in order to resolve issues such as evictions and so forth. And that process is very backlogged, and unfortunately not very supportive of landlords currently. I mean, and it definitely, the deck is stacked against you, and especially if you're just good people that are trying to provide good homes and spaces for people, still have to go through the ringer. and the backlog is really bad. So it took us probably 8 to 12 months to get him out on an emergency order. I think it was closer to 12 months by the time he got out. We finally got him out, but the place was a disaster. We've had to renovate the whole unit. The whole place had to be gutted and redone. Garbage, and it's a lot of money. The place is vacant, so there's no rental income coming in. So we're hemorrhaging money every month. And that's all because of one decision. I brought in the wrong tenant. That's all because of one decision. And actually, I had a property management company that was doing that at that time. It wasn't my company. I had outsourced it to a property management company. But I didn't, again, he just fell through the cracks, and that kind of, it burns you as a landlord. It tires you out, and financially, it's extremely draining. But at the end of the day, you have to sit back and look at, how much did I buy the property for? How much is it worth now? How much have tenants paid it down? I'm about to refinance that property. For that pain, it was short-term pain, a very, expensive lesson. But I've learned more, and that will never happen again in my real estate career, ever again. And, at the end of the day, I'm still coming out on top. So, you just have to be prepared for that. There's always 5 or 10% of your tenants. Everyone else is great, but there's always 5 or 10 at any given time. That's going to be a problem. And you just have to be prepared to deal with those kinds of situations, and know that it's just part of this game. It's the cost of doing business, as they say, right? You're going to take some losses. It's going to be stress, and it's just be prepared. And part of the nice thing about the property that we have there, that's with a joint venture partner, in fact, is we have very strong cash flow. So despite non-payment of rent from this, the vacancy right now of that property, and despite the fact that we have to do major renos, which in fact will appreciate the property overall and give us higher rent, we are not going out of pocket. The cash flow is still paying for the hemorrhaging of the rental loss in some of these rentals. So that's the nice thing about this business, is that it does generate wealth quickly, and from a cash flow perspective, if you can find a really good property and do the right renovations to your property, and have strong cash flow, you have a surplus to work with, a reserve to deal with issues like this.
That's amazing that you're not out of pocket yet on that one. It sounds like a nightmare. I think the lesson, if I can take away from what you just, like the story you just said there, is put the work in up front, and try and keep that percentage to as low as possible, right? Like don't skip over the background check. Don't skip over, digging a little deeper into that person's history, or trying to, vet them properly, right?
Mm-hmm.
As far as your portfolio now, how many doors are you at? How's that kind of looking?
Yeah, so I am at just closing on another property, a triplex in Hamilton. So if we include that, we'll take possession in January. But if we take possession of that, I'll be at 7 properties, and about 27 doors. I've got, in terms of most of my properties are in Hamilton. I love the real estate market in Hamilton. I think Hamilton's a great city. I've got one in Toronto, and I'm also this year acquired an apartment in New Brunswick, St. John, New Brunswick, which a lot of people kind of like turn their head a bit and think, okay, that's like way East Coast. What's going on there? I was out there and I thought, hey, this is an interesting market, and I did some market research on it and talked to some other investors, and the numbers, it comes down often to numbers. And for me, it was a test, because I've always wanted to own, like, one on my kind of my big dream goal list is to own a foreign property, so, like almost like a winter home or something like that, like a vacation rental type of thing that could be managed from afar. So, this is kind of a test of that, where I entrust the property management team there, and kind of use technology, Zoom calls, phone calls, email, all of that stuff to do renos. I'm doing a BRRRR on this 6-unit building in New Brunswick. where I'm essentially managing contractors from Toronto, where I am now, doing calls. I purchased the property without even going out there. It's in the middle of COVID, so I couldn't even physically go to see the property. But it was a really good off-market deal that I couldn't resist, and I just I felt I had faith in the local team that I had established there, inspectors and realtors and so forth. And I pulled the trigger, and that's still to be determined in terms of how that works out. But I feel pretty confident that I'll be able to extract all my capital, maybe a little extra, probably in the next 4 to 5 months.
That's great. Sort of diving into that, you mentioned buying that property during COVID, not seeing it, all the complications that COVID kind of, puts on everybody. How do you see your growth in the next 2, 5, 10 years? Like, where do you see yourself? You mentioned like having a goal of having a vacation property, but do you have like a target in mind over the future, or sort of where do you see yourself?
Yeah, it's a great question. So I had a goal for myself by the age of 42, and my goal was I want to be financially free, where I don't need to have a day job. I don't need to rely on other sources of income. My real estate portfolio will effectively provide me with the capital I need. And obviously, from a long-term wealth generation, we all want to retire. We want to be able to pass, some level of wealth onto the next generation, to our children and their children. And so, I have certain goals there, but to my surprise, they say, be careful what you wish for, right? So, I achieved those numbers. So I had sort of, a monthly cash flow number target that I needed, that where I could, walk away and say, I'm comfortable walking away from a day job, and not ever have to worry about, going into a day job again. And I was able to meet that at the age of 39, really 39, 40, which was awesome. So I definitely hit that target, which I didn't expect, a little bit earlier than what I originally had set out at, which has opened up kind of new avenues of exploration when it comes to those bigger goals in life. Yes, like you mentioned, having a foreign property is one of them. But at the end of the day, I think it's, you set these goals, you push yourself for them. And, I was working at this particular goal for a number of years, probably, 3 to 4 years. I was going pretty hard on focusing on this particular goal. Now that I've achieved it, I mean, the question you pose is something that I'm pondering now. What is my next goal, right? When we achieve when you get to the top of a certain mountain you thought you couldn't hike, you suddenly realize, okay, I got to find a bigger mountain. What is that next challenge? And that's kind of where I'm kind of looking at new possibilities and new goals that I want to set for myself. A lot of them are not even financially focused, or like how many doors. A lot of people like to focus on, how many doors do you have? And that really depends. If you have a single family home, that's $1 million home versus, 1-bedroom apartment, the value of those properties and the cash flow of those properties may be quite different. So, and doors is work. Looking at, I always like to look at what other, really established investors are doing. And I had a coach, which is extremely helpful in my journey for sure. Quentin D'Souza, I'm going to name drop. He doesn't coach anymore, but he's an incredible coach, and he really helped mentor me to take that next leap from a business perspective. But it's kind of come together, and the focus now is really on, how do you live the lifestyle that you want to live. And I think for me, it's kind of stepping back. I'm kind of in a reflective part, when you don't have those pressures of finances there, and I still managing that many doors, with rental projects and BRRRRs happening and joint venture projects, that's going to keep me busy. But now it's kind of, I guess I'm in a different stage where I'm looking at different types of goals for myself. Part of it is similar to what you're doing. I'd love to just educate and share, with other people, especially new investors. And one thing I'm looking at now is just trying to build more of a mentorship program for younger investors, or people who are not even clued into the power of real estate. because I think real estate is one of the most powerful, if not the most powerful driver for wealth generation and financial freedom, and probably the most democratic way to generate wealth, where most people should be able to get into this game if you work hard and you execute the right strategies, even if you've got no capital. Knowledge is power, and putting in the time and focus and surround yourself with the right people can elevate people's games tremendously. And so, yeah, just trying to find ways to help other people and just encourage other people and provide them with resources while managing my portfolio and stepping away as much as I can. I'm trying to, I've got an assistant now and I'm mentoring somebody and just building more of a team that can assist me with a lot of the day-to-day management of the business, so that I can actually step back a bit and focus on some other things that excite me a little bit more than dealing with leaky toilets.
Absolutely. How has investing in real estate changed your life? Like how are things different for you now than before you got into investing?
Yeah, it's like black and white. I think it just opens up. It's had a massive change, if not the biggest change, in terms of providing me with. I mean, I've been investing for 8 years, so it seems like a long time, but at the same time, there's people that have been investing for a lot longer than me, or shorter, but have grown their business a lot more. But for me personally, for the goals I set for myself, it's a game changer. I mean, it's for the amount of time and effort put in, and the net return on that time, the benefit in terms of financial freedom. It's almost impossible to quantify how incredible the benefit has been, because you cannot, I mean, having, we're on this planet, we've got a life to live, time is finite. To have time, which is probably the most precious asset we have, and health at your disposal is incredible. So, I see people around that are very successful lawyers or partners in firms, or, accountants, and other people working hard at other jobs, but they work really hard. They put in a lot of time, CEOs of companies. Those are 12 to 16 hour days, 5, 6, 7 days a week. I'd rather not trade my time for money. I'd rather, have a life where I can enjoy it, and do the things I want to, spend time with family, friends, travel, love to travel, do creative projects, help other people in different ways. So, to answer your question, it's a game changer. There's nothing else that has happened in my life. And I've had different jobs, and I've lived in different countries, Europe, Asia, Central America, Cuba, close, Caribbean. And those all had huge impacts on my life, but nothing has substantially changed my life that will for the rest of my life than real estate, because I now have eliminated the clouds of uncertainty when it comes to my financial future. I don't have to worry about my retirement, because I know it's already there. Like, it is done. I don't need to worry about RSPs or pension plans. It's already set, game, set, match. I don't need to worry about my daily my daily income, my monthly income, my yearly. I don't need to worry about my job, because my cash flow from my property portfolio covers what my costs would be. And that's only going to increase with times. So when you remove those clouds of financial uncertainty, it sort of opens up this beautiful blue sky of opportunity, where you look around and you suddenly see everybody's busy, heads down, focused, working. And you think, man, I'm pretty lucky. I feel pretty fortunate. I didn't work I worked pretty hard, but I didn't work that hard I'm not working as hard as these people right now. Far from it. The number of hours I put in a week, maybe 6, 8, 10 hours at max, on a busy week. And that's kind of a joke for some people. That's like a day of work. I used to put in those kind of hours every day. And, I feel very lucky and fortunate that I've kind of stumbled into real estate with no background. I was literally convinced by a friend who was a realtor at the time. I had a bit of money for a down payment on a property, and she essentially just convinced me to buy a property. And we literally bought a property the next day. And that I still own that property to this day. And that was one of the biggest decisions of my life, is just kind of stumbling into this thing called real estate and becoming suddenly a landlord. And I didn't know what I was doing for probably 5 years. I was winging it. I was just, it's like, I got a property. Oh, I bought another one. Things are, as I've educated myself a little bit more and surrounded myself with, people that are very much in this industry, got the coaching, listened to podcasts, that sort of thing, and obviously done research. I've fine-tuned the strategy more, and I'm seeing, a quicker path to achieve certain goals. But yeah, I mean, that's kind of a very long-winded, I think, response to your question. So my apologies for that, but game changer. That's one word. It's been a game changer.
No worries. Just before I let you go, I know we're running a little tight on time here. Looking back on things, what would you change at the beginning, or maybe even now? If you knew what you know now, what would you change from your past as far as investing in real estate?
Yeah, so I mean, I think that's a really good question, and I hear this in podcasts a lot, and I think it's a good one because everyone has different answers to that. I would if I could go back in time, I would 100% start investing sooner, knowing what I know. Hindsight's always 2020, and I know what I know. I probably wouldn't have known that in the past, but I probably would have started a lot earlier in this space. I don't have any regrets. I did things, at my own pace. I've always sort of worked in different jobs, and that often consumes most of your bandwidth during the day, and you don't know what you don't know until you do it. But essentially, I would like really start focusing on doing this a lot sooner. And I would definitely encourage people who are interested in this space to really do the homework, research it, you listen to podcasts, learn from other people's mistakes, and dive in, jump right in. And you may not have the capital or feel that you've got the knowledge, and that may all be true, but there's still ways to get involved, and educate yourself, and get mentored or shadow somebody who's doing this, offer something to somebody to get the experience that you need to jump in.
If somebody wanted to invest with you, if somebody had any questions for you, if somebody wanted to get into investing and maybe doesn't have any capital and has been humming and hawing about it, what is the best way for them to reach you?
Yeah, so I mean, probably the best way, I'm on LinkedIn, so you can find me on LinkedIn, James Meers. You can go to the website and there is a contact email there. So the website's parkstreet.ca. Those are probably the easiest ways to reach out. Not a huge social media guy. I don't even have Instagram. I probably should. I know a lot of investors do that kind of stuff, but I'm a little bit on the lower key of things. But yeah, those are probably the two best ways to reach out.
Okay, everybody watching, if you enjoyed this episode with James of That Real Estate Podcast with Henry Matthews, can't believe I messed that up. Please go ahead and subscribe again. It would be a great help, and it would make sure that you don't miss any of my upcoming interviews. James, thank you so much for coming on the show. I really appreciate it. And I feel like you've provided a lot of information for the viewers today.
Great. Thanks so much for having me. It was a pleasure.